let's take the discussion forward because this rate cut means a lot for some of these rate sensitive sectors like real estate, banking and consumer discretionary. So let's deep dive into the real estate pack and let me welcome Dr. Niranjan Hiranandani, founder and chairman of Hiranandani Group, joining us on the show. Very good afternoon, sir, and thank you so much for your time. I'm sure you must also be welcoming the move by the RBI because real estate is one of those most interest rate sensitive sectors. So give us some sense that what will it really translate into for the real estate demand going ahead, and vis-a-vis the comparison between tier 1 and tier 2, tier 3 cities demand, where do you believe that the more push can translate into?
Thank you very much. We are, of course, in the real estate business, delighted with what has happened. You have to realize that this is the third rate cut. So when we talk about the reduction or benefit on a 1 crore loan of being 3,085, in reality, it is twice as much because there have been 225 basis point cuts which have taken place in the earlier 3-4 months. So I think that is a further benefit that we can see. So housing where larger amount of loans are taken for a longer period of time and where the interest is reset based on a third party indication, like it has happened in the case of the Reserve Bank of India, it is compulsory for the banks to do so. So in reality, each and every customer who has taken a home loan from banks and financial institutions are going to be benefited, even those who have got past loans. So that's one thing. Second, it becomes an easier one for new purchasers who will find that their budget is fitting into the calculation on the new EMI calculation which is there. So the affordability in respect of home will increase. So that's the second benefit that really takes place, who are enthusiastic about it. And since there is a softening stance, which we see in the Reserve Bank, even looking forward, I think there's a further benefit on that. Now, let's look at a long-term situation. When a person takes a home loan, say today at 8%, and there is another benefit of say 1 to 1.5% in the case of affordable housing, in the case of PMIY scheme. So then that becomes 6.5%. Today, with inflation being around 4%, if you get interest rates coming at that rate, your real cost of funds comes down to 2 to 2.5% or 3%. So I think it becomes advisable as interest rates fall for a person to take home loans and actually borrow monies for the purposes of it, because as inflation continues and interest rates are dropping, there's a dual benefit to a home purchaser to take loan against the properties that are purchased. So there is a double benefit to the customer under the present circumstances where they are doing it. One more flag off that I'd like to make is that in the last 1.5 years, we have seen a drop in the sales of affordable housing. I think the PMAY scheme and the reduction of this interest rate will be a dual benefit to affordable housing. We have to wait and see how much it affects affordable housing, but I am certain that there will be a benefit. And to your question, as to what is likely to benefit in tier 1, 2, and 3 cities, my view, it is all the three. So all the three sectors will benefit in terms of it because there are home loans taken in all the three areas, whether it is tier 1, tier 2, and tier 3. But best of all, in all the cities, affordable housing will definitely see a double benefit because of the addition of the PMAY scheme.
Okay. Hi, sir. This is Kanishka also joining in. You've already mentioned that affordable housing is going to get a boost across the board, tier 1, tier 2, tier 3. But, we recently had this report where which talked about how premium segment is also witnessing a bit of a slowdown. Do you think there also demand could be coming back? What kind of demand do you expect? And apart from that, is there any other segment when you, the maximum demand is going to come from?
I have a contrarian view. the demand for luxury housing is not coming down. We have just seen a premier of premier rates which have taken place in Worli very recently. And in fact, we see that the prices are actually going up. Maybe there has been a quarterly reduction in the total number of sales which have registered. But I don't see a reduction in demand in the case of high-income housing or in the case of luxury housing at all. In fact, I feel that the demand is continuing to grow. And as GDP numbers show better and better, there are more people who are ready to buy luxury housing, which is there. So I don't see that as a problem. So I don't agree with the fact that there is going to be any reduction in the demand of it. And of course, with the interest rate falling, those who will be going for home loans will be further benefited because of the lower interest rates are there. Also, the liquidity of banks is set to be increased. So I think that also will help more funds to come to the customers and to the developers and all the people in all sectors of the economy. Because with the reduction of CRR by 100 basis points, almost 2.5 lakh crores of rupees will come into the marketplace further as credit availability in the marketplace increases. So I think more funds will be available through the banking sector, where there was some constraint because of deposits coming down in the banks and financial institutions. I think the RBI governor has given a liberal situation of reducing CRR by 100 basis points so that the liquidity of banks and financial institutions can also grow. So more money will be available for home loans, but also for further credit throughout the economy.
All right. All right, Mr. Hiranandani, with this, we let you go on that. Thank you so much for taking the time out and helping us understand what does it really mean for the real estate as a whole. But for this, let me also welcome...
If you like this video, then like, share and subscribe to ET Now.